Hello, hello. Yes, this is a new stream. Uh, how's everyone's week been so far? It is the middle of the week, yippee, right? Um, so today we're going through actually question 2 and 3. Last week we skipped it because it was more of a theoretical question, which means I want more interaction with my student who unfortunately had some sore throat. He couldn't speak much. I don't want him to speak much. So yeah, today I think he has recovered, so we can actually go through the questions proper. Right. And okay, so for those of you who are new to the channel or you come across this video, I'll just introduce my channel real quick. Right. um what I do is I hold streams 2 times a week teaching accounting, mainly focusing on the basics, right? Because I believe that strong foundation is the way to go. Especially because accounting standards, accounting principles can differ slightly between countries, but the foundation should stay the same, right? So yeah, hopefully, by doing this, you guys can actually appreciate accounting a bit more. Hopefully, if you learn anything from this, that is good enough for me. Honestly, that's just my goal. Hoping that you guys at least gain a bit of knowledge or gain a bit of appreciation for what we do in this field. And if you're already working and you feel lost about how to do accounting in general, uh, I hope this helps, right? And yeah, without further ado, let's start. Let me get in contact with my student. Hello, hello. Are you there? Okay, let me unmute you on the OBS. All right, I think we can hear
I
you.
joined that.
Yep, you are live. Yay! You all right?
Yeah.
Okay,
Feeling much better now.
right. All right. Let me stream this to you real quick. Can you see this on the?
Yep.
Okay. Right. So today is just a lot of theoretical questions, right? Um. So let's just start.
Oh,
Uh. So what do you understand from question two? Just the storyline itself.
the storylines of let's
Mm.
see. Firm runs a furniture warehouse.
Mm-hmm.
Business makes an average annual profit of over 200K.
Mm-hmm.
So profit of the year equals 200K.
Mm-hmm.
The year. Okay. He has decided that his business should treat purchases of office equipment less than $500 as revenue expenditure.
Right. Okay. So what do you understand from the two words revenue expenditure?
Cost of sales.
Hmm. Okay. What about you look at the screen right now? These are the two classifications: capital expenditure and revenue expenditure. So now knowing these two classifications, what do you think revenue expenditure means?
Revenue expenditure. Uh, Less revenue.
Okay, okay. So you treat it as expense, right? Right?
Yeah.
Okay. What about capital expenditure?
Capital expenditure. Is it not also an expense?
Okay. So let's explain it a bit more, okay?
All
Usually,
right.
capital expenditure is used to describe, uh, you know, you getting a non-current asset or improving on a non-current asset. So, for example, you buying a factory, you buying a machine should be considered
Right.
capital expenditure because you are okay. So
It's
this word
intense.
capital, right, has a different meaning now. Instead of referring to equity, it's referring to the economic sense of capital. Basically, just
Right.
resources that you use to generate money.
Okay.
Okay, so the terms here is a bit confusing, and I don't blame you for being confused here. I was confused as well before. So yeah, usually when
So
you see capital expenditure, then they are referring to the non-equity version of capital. Okay, like those two words
okay.
come together.
So
Yeah,
increasing assets.
yeah. So you capitalize it as an asset. So what do I
Okay.
mean by that? So for example, you have a factory, right? After you use the factory for a while, it gets run down, and the paint starts peeling, the wall starts, having holes in
Yeah.
it, all that stuff, right? You
Yeah.
do like a proper renovation, right?
Mm-hmm.
Um, okay, this is a bit technical. If you are just doing repair work, what do you think
Mm-hmm.
this counts as? Capital or revenue?
Power.
Repair work.
Capital. Uh, capital expenditure.
Okay, so the keyword here is to improve or get a new one.
Right.
Here would just be repair, maybe make functional again.
Okay.
Basically, if you're not adding on actively to it, it is considered a revenue expense.
Okay.
Hmm, right. So again, new item is adding on to zero, right? You have nothing before that. Improvement is
Right.
adding on to something old. So for example, factory, you just do a renovation, repair works only. You don't add anything to it. It's considered fully revenue expense, revenue expenditure, and you treat it as an expense, right? But if you add an extra room to the factory that has a use to it, for example, like you add an additional office to the factory, then you count it
Right.
as adding to the original factory, which is the asset.
Right.
Is it clear now?
Uh-huh.
Okay, so far any questions?
So far, no.
No, right? Okay. Let's get a example. Do you use laptop or you use desktop?
Desktop.
Desktop. Okay. So for example, your case fan broke, right? And you bought a new case fan. Is this considered a revenue or a capital expenditure?
Revenue expenditure.
Okay. Um, what if you bought an extra stick of RAM, like your pair, sorry, extra pair of
Then,
RAM?
then additional capital expenditure.
Okay. So yeah, you seem to have gotten it. Right. So these are the more straightforward examples. So hopefully, I don't know where you can actually practice this. If you can
It's
try
alright.
to.
I'm sure there's like chances in the future.
Right. Yeah. Just if you see something, I mean, this sounds a bit nerdy, right? Like you try and think of it in accounting terms, but that is the best way to learn a language, to be honest. You
First, you gloss
translate
out
it from
some
English
question.
into the language that you desire to learn, right? So
For sure, process and be like, actually,
uh I don't have those nerdy glasses in my model. I do have it in real life though. All right, okay. Back to the point. Back to the point, right? So,
right.
now that we've actually cleared this is actually important to know. I don't know why it's not part of the question, but I feel that this is actually more important than the question itself.
Mm.
So yeah, do you mind reading out the answer for this part A?
Um, Part A, the name of the theory they have stated for materiality
Ah,
theory.
okay. Materiality. So,
But they def- but they definition by their definition,
Mm.
materiality theory allows the purchase of non-current assets,
Mm-hmm.
which are of lower value, to be recorded as revenue expenditure instead of capital expenditure. Since the
Mm.
equivalent of $500 is low as compared to the company's average annual profit of 200K, it can be treated as revenue expenditure.
Okay. Can be classified as revenue expenditure. Okay, so well, let me just explain to you materiality. Okay, so as you go into higher level accounting like audit, um, and things that require a lot of judgment, right? Materiality plays a bigger role. So what does it actually mean? Well, it's actually just a way for us to decrease the work that we have to do. Because we have a finite amount of time, right? And huge companies are huge because, they process a lot of transactions and all that stuff. So if you have to account for every single nut and bolt, right? Uh things get a little out of hand, if you can imagine, right?
Okay, yeah.
Yeah. So this materiality basically, okay, in essence, it is above a certain amount of like, for example, we see it as like kind of like an error, right? Lapse in judgment, an intentional error, whatever. One of those. Um, and that amount, if it is an error, right? How much will it impact the whole the view of the company basically? So if you look at financial statement, right? If their assets is, say for example, total assets $1 million, okay, and they have an error of 500,000, do you think um that will impact how people see it, like see that company?
Yeah.
Yeah, so this is the essence of materiality. Of course, the actual definition is more
It's much.
specific, more technical, right? Yeah, so in essence, it's just over a certain amount, uh, it will impact the way we view the company, like whether or not we want to invest in them, whether or not we want to pull out, whether or not we want to work there, whatnot, right? Yeah. So that essentially is materiality. This is one form of it, right? Below a certain amount, you wanna um be able to classify it as just as an expense instead of keep adding like $1 or 50 cents to your assets just because you added something, right?
Right.
Yeah. So yeah. So far, any questions regarding this?
Wouldn't this kind of conflict with the principles of professional ethics for an accountant?
Ethics wise, okay. So there is a fine line, right? How ethics works is that you want to remain you know professional.
Right.
Yes. So what that means is you gotta do your due diligence. Basically, you gotta question, right? So just
Right.
because someone says, or like, the company policy says this thing, you don't just blindly follow it. You gotta question it and, gather enough evidence to support your case or
Right.
debunk the case, basically. Right. Then you decide what you do with it. Right. So it's not really a conflict, it's just a additional guideline that you just implement along with this.
Okay.
Mm. Because all these are principles and theories, right? In real
Mm.
life, obviously, it's way more complicated. So, in order to apply it, you gotta, yeah, exercise judgment. This is why,
Okay.
so far, AI can't replace this
Mm.
part of accounting. Yeah,
Okay.
so far, for now, right? We don't know. I might say goodbye to my job. I don't know. uh, right. Okay. So yeah. So far, any other questions regarding this?
No,
No.
that was
Okay.
my only.
All right. All right. Let's go to part B then. State journal used to record purchase of non-current asset. All right. Let's let you try this. I believe you can do this. Oh my, what happened there?
Uh,
So, what do you
oh,
debit first? Or rather, what happens when you buy a non-current asset on credit?
when I buy a non-current asset,
What do you receive? What do you give out?
um, on credit is trade payables.
Okay,
That's what I give.
so you debit or credit trade payables?
I debit trade payables.
You debit trade payables, and then what do you credit?
Then credits. I credit asset.
Mm.
No, not. Is it
No, yeah, I mean you got the accounts correct, but you got the sequence wrong.
credit capital? Was it?
No, you got accounts correct. So
Okay.
non-current asset you debit,
I was good.
trade
Yeah.
payables you credit.
Oh.
Mm.
Oh, okay, okay. So it's paid already.
Yeah. So not sure if you could still remember the accounting equation, right?
The equation, yeah. A equals L L plus E, was it?
Mm-hmm.
Or was it
L
L
plus
plus
E,
E,
yeah.
right?
Yeah. So well, how do you okay, now that you know the answer, right? Can you explain why? Like use your own words,
No,
use your own way of thinking to explain why do you think when why do you think we credited trade payables? Why do you think we debited the non-current asset?
we credited trade payables because it's under liability,
Okay.
and there's under asset.
Okay. Right. Then why do you credit trade payables here?
Uh, because in order for um,
Mm-hmm.
uh, uh, how do I explain this
Use your own words. Use your
mathematics?
own words. Just voice it out.
I'm trying to articulate here.
Okay. It's
I'm
alright.
trying not to lose some process. For me, it's cause
Mm.
non-current asset is from asset. The purchase the purchase has been made, so
Mm-hmm.
I have received a non-current asset. So non-current asset goes up.
Mm-hmm.
Meanwhile, for my assets to go up, I have to balance it out from liabilities, which is my trade payables.
Mm.
So I credit.
Okay. Alright. So remember your own explanation. The next time use this to guide when
Right.
what to debit, what to credit. Okay?
Okay.
Yeah. Because you got the accounts down. You got it correct. It's just that the polarity is swapped.
Mm.
Right. Uh then
Uh,
what would your first answer be? What scenario would it be? Where you debited trade payables and credited non-current asset.
I forgot what the journal was called. I forgot what the journal
Just
was
describe the scenario. You don't need to say what the name of the journal, like what classification of journal it
called.
is.
Uh, describe this. Uh, um,
Uh,
the one basically the one that balances out everything. What was
Okay,
it?
okay. So let's take it step by step, all right? What happens when you debit trade payables?
When you debit trade payables.
Mm,
Uh, Debiting trade payables, you owe someone money.
is
You
it?
you made a purchase paid for it.
You credited trade payables in this scenario, right? when you bought on credit. So what happens when you debit trade payables? You alright? Oh no. Oh no. Uh. Oh no. You alright? Oh my goodness. Oh.
Yo,
Oh, you're
sorry, I
back. Okay. Okay.
think disconnected.
Yeah. No worries. No worries. Yep. Go on.
So we debited trade payables, right?
Hmm.
Asset goes down,
Trade payables is what account again?
ability.
Liability. So what happens when you debited? What happens if you debit a liability?
We debit a liability.
The liability increase or decrease?
It increases.
Increases. Are you sure?
Is it not?
Here in the actual answer, you credited trade payables to show that you bought on credit, right?
Oh,
Hmm.
oh, okay. So liabilities are credit in nature. So if you credit some more, it just increase. Oh, so so liability also wait.
So what happens when you debit a liability? Does it increase or decrease?
Liability increase. Was it? No,
Increase?
decrease.
Decrease? So
Decrease,
so
decrease.
make up your mind. Which one is it? Come on, just say it with confidence, even if you're wrong. Let's do this. Let's try that.
Fuck it. It decreases.
Yeah, correct. You're right. You're right. Congrats, you won the 50-50.
It's cause like if liability is like credit in nature, debiting
Mhm.
it would just bring.
Yeah, correct. That is exactly what happens. Yes. Yeah. So back to the scenario, right? Where your first answer, where you say you debited trade payables and credited non-current asset. So you've established that your trade payable decreased, right? Then what happens to your non-current asset when you credit it? Did it increase or decrease?
If you credit non-current asset, it decreases.
Decreases. So in what scenario will you have a decrease in non-current asset and also a decrease in trade payables?
An increase in equity.
No, as in a real life event.
Uh, well, event. Decrease in non-current asset.
Mm-hmm.
There's a decrease and decrease in liability.
Mm.
Uh, when sales on? No, it's not sales. I'm not sure.
You made a return.
Oh, okay.
Yeah. So your first answer, right, was a case where the company already bought something but haven't paid the other party yet and decided to make a return, like make a refund.
Right.
Yes. So that is the case.
Okay.
Mm. So yeah, hopefully you can kind of distinguish between the two, right? It's okay. This comes with practice. It's fine. Uh, and so far, any questions?
Fun, no.
No? Okay. All right, then let's tackle part C, which is now theory question. I believe you can just kind of like read out the answer here.
Hold on. Part C.
Hmm.
We still haven't done part B.
Part B, you already
Is
done it, no?
so
Oh, state the
so
journal itself. Okay.
so
So, I mean,
like so we just saw I was kind of lost. It's like
yeah.
okay,
So, okay. Then it's probably like, I think it's a sales day book. No, it's not. The purchases day book. If I'm not wrong. Might be.
sorry.
Or is it just a
Okay.
general
On
journal?
yeah, it's the general journal.
General
It
ledger.
says yeah,
Okay.
general journal. It's that's kind of journal. Ugh.
Okay. Yeah, so
Hmm.
this one I wouldn't know.
Let's
This one I wouldn't
let's
know
see.
because
Well,
like
okay.
every year that term changes. So
Right.
yeah. But purchases daybook is essentially purchases on credit, but because this is a non-current asset, it probably can't be used here. Right. So
Mm.
I think general for us, I think we use general ledger instead of general
Uh,
journal. But yeah, that word just keeps changing. It's fine.
old old timings, the old timings.
Yeah, for now I just call it general journal. Okay. Alright. Now part C.
That this is one I have no idea of.
Ah,
I don't know what the two roles of accounting is.
I mean it's 2 marks. I don't know if you wanna throw it away.
I generally don't know.
I mean what does the
According
answer
to
say? I feel like it's a lot of answers to this question.
uh decision making stewardship, which I would have never guessed.
Decision making is okay, I think. Stewardship is just
Yeah, but what the hell
very
is stewardship?
technical word.
How oddly specific.
Yeah, so I think these are memorized. These are for you to memorize, if I'm not wrong, right?
Yeah.
Man.
Uh okay. If that's the case, we'll move on to question three. Question three is just one part.
Yes, question three is
Um
just one.
name name accounting theory applied,
Oh,
which I
sorry. Wait,
legit
hold
don't
on.
know.
My bad, my bad. Give me a second. Okay. Go on.
I have no idea what the accounting theory for
Hmm.
that was applied for foreseeable future would be.
If I'm not wrong, it is called the going concern.
Going concern.
Hmm. You can see if it's the correct answer.
Right. You are correct. What
Ye-
is a going concern theory? Can you
Okay,
explain?
so this has to deal with the way accounting is done. So there are two ways that we can do accounting. One is accrual
Right.
basis. The other one is cash basis.
Right.
Accruals basis basically just means when you incur it, right? So for example, I've incurred the sale. Like I have on paper made the sale, even though it has not happened yet, right?
Okay.
You enter a contract, but a contract doesn't mean anything unless like the contract doesn't um guarantee that you would get the goods, right? Because things can happen, right?
Right.
So accruals state that when you incur a, you know, like when how do I explain this in a simple manner? Kind of like when you know for a certain like probability that it's gonna happen. Like you're
Right.
kind of sure that it'll happen, something like that. Then
Okay.
you record it down as take it that it has happened, right? And also when you make a lump sum payment, right, for a period of time, you don't recognize everything at when you pay it. You recognize it
Right.
as over the period of time that you have stipulated. You kind of get it.
Okay.
So you spread out. Basically, you try to spread it out according to your use.
Okay. Okay.
Mm. So it basically is trying to accurately reflect how you are actively running the business, right? Cash
Mm.
basis is purely cash, meaning when you pay cash, you recognize that whole thing as that at that point in time. Okay, the
Right.
easiest way to illustrate this is just like membership,
Uh
right?
huh.
You bought a gym membership or whatever membership for 1 year, right? Uh,
Yeah.
and let's say $1,200. Okay,
Yeah.
under accrual basis, you split it into hundreds over 12 months.
Right.
Yeah, so this is for Jan, this is for Feb, then at the end is for December. Okay,
Um,
assuming that you paid on the 1st of Jan. Okay, under cash, you just recognize it in one lump because
mm.
that's when you paid.
Mm.
So this is the clearest explanation I could give in terms of the way you do, like how the biggest difference between the two, right?
Okay.
You kind of get it now.
I have a vague idea,
So explain in
but
your own words. I want to check your understanding here.
so so just the going concern theory is in a nutshell just uh so
Oh no,
something that hasn't
this is linked to going concern, but it's not the definition of going concern. I want you to explain the
oh it's
difference between accrual and cash basis first, because it's important to
uh
understand.
accrual basis, if I remember correctly,
Mm,
is something that is about like 90% that's gonna happen, but it hasn't happened yet. So it can be changed. But you take it as it has happened so that you can kind of work with it and stuff.
mm,
Cash cash basis is like um you the transaction has kind of been partially made, is like they paid for like this duration of service,
mm-hmm.
uh but but it's gonna take like then whether or not they'll get a full duration of service is like not not guaranteed.
Mm.
That's kind but they pay everything up front already, so it's like
Okay,
that's how
right.
I can
Okay,
understand.
okay. Let's see. Do you understand what we mean by accounting estimates?
No.
No. Okay, so depreciation is an accounting estimate. It's probably the most famous one.
Right.
It's an estimate because how do you know exactly how long you need to use your asset for? Do you know for sure
Right.
your computer can last 10 years?
Right. There's no definitive
Right.
number on.
Right. So is it an estimate then?
Right.
Mm. So
Okay.
accrual basis relies a lot on estimates to keep it running.
Uh
Why? Because um you can't see the whole transaction. Like the transaction could have been made way earlier or could be made way later. But you recognize parts of the transaction as it's supposed to have happened. So you treat it as a whole timeline.
right.
Yes. Whereas for cash, you treat it as a point in time, right? So, um, for example, you make a prepayment. That
Right.
entire year's worth of prepayment is recognized at that one point in time. Or if you make
Right.
like post payment, like postpaid, basically you use then you pay, right? You recognize the entire year's worth at that one point in time at the end.
Right.
Yes. So that is what cash basis is. Okay. So now is it a clearer picture? Cash basis, you
Uh
don't use a lot of estimates. You just treat it as
okay.
such, like yeah,
Okay.
at face value basically.
Okay.
Mm. So going concern is the assumption that businesses can continue forever.
Mm. That nothing will go wrong.
Yes. So
Okay.
why do you think that is important? And how do you think this links to the accruals and cash basis of accounting?
Mm, I'm not sure how to put it,
Mm-hmm.
but it's like um I actually don't know how to put it.
How about these two words that I've placed, that I've
Point
wrote?
in time. Very predictive.
Okay. Then
Assumptions, I
okay,
guess.
so if you say this company is a going concern, meaning that
Yeah.
it can continue running forever, which basis do you think they will use?
Uh, accrual basis.
Yeah, correct. Correct. So when a company is about to go bankrupt, right? You know for a fact that they can't continue forever. then going concern becomes an issue, the company will have to switch over to cash basis accounting. Why do you think that's
Right.
important?
So that they have like a they have like guaranteed sort of
Mm-hmm.
the transaction is more guaranteed, I guess.
But who are we guaranteeing here?
We're guaranteeing so let me try to picture this real quick.
Mm.
So try to guarantee our end because we're receiving their services first and then we pay them for whatever they did.
Okay, so it's slightly off. So cash basis, right? The whole point of it is recognizing things at a point in time, right? So when cash actually transfers.
Right.
When the company is assumed to not be able to continue, right? Cash is king.
Right.
You gotta be able to pay back. Okay, so this is a bit of like ranking system, okay?
Mm.
Liabilities generally have priority over equity. This one you might see. When a company goes bust, right, who do they pay first?
Mm.
They pay their
Um, debtors.
debtors is kind of not the right term here. They pay their creditors first.
Okay.
Debtors is people who pay them.
Uh,
Yeah. So liabilities
oh.
take priority over equity, right?
Uh-huh.
So uh liabilities would just be, your creditors, your suppliers, right? Equity could
Right.
be your employees,
Uh-huh.
employers,
Uh-huh.
your shareholders. Okay, it's pardon my
Okay.
handwriting. Okay, wait, let me see if I can write it more clearer. Right. So, uh, yeah, liabilities takes precedence first. Oh my. Yeah. Then followed by equity. So this is why, if you remember the very first accounting equation that I said, right? Asset equals to
Mm.
liability plus equity, or what's the other term for equity again?
Not liabilities.
Right. Now do you see why
Okay.
liability is so heavily emphasized instead of equity?
Right.
Hmm. So this
Okay.
is a bit of kind of like business sense also. You owe more to your people who lend you money than people who invest in you.
Right.
Yeah. So this
Okay.
is this is a subtle thing that will not be directly asked, but it's important to understand.
Okay.
Mm. So once again, what is going concern?
Going concern is a company taking the assumption that all future transaction will be smooth sailing. It will always
Mm,
happen.
not really
I think
smooth
I think
sailing. They
about
could
a lot.
be they could be downsizing, but they'll survive.
It is basic. Okay,
Mm,
smooth sailing is two rainbows and stuff, but
mm,
basically the business will keep going nonetheless.
mm.
Uh, for the foreseeable future.
Yeah, foreseeable future could just be like 5 years, 1 year. This sort of things is a bit of
As
bit
long as
iffy.
the transaction dictates.
Yeah, I'm not sure if the standards would say how many years, but I think for now, I don't think it's for you to worry about.
There was no definition. I'm just gonna say foreseeable future. Fuck it.
Yes, yes, okay, that's fine. Right.
Yeah.
Okay, then let's go back to the top. We just do a few recaps, then we can end it. Yeah.
Sure.
Okay. So what is materiality?
Uh. Okay. Materiality. Materiality is uh. It is basically just if the expenditure is too insignificant
Mm-hmm.
uh for like purchase of asset, if it's too insignificant compared to the annual profit income, uh it can be categorized as a expenditure under revenue.
Under profit or loss, not under revenue.
Uh,
Expenditure and revenue
okay,
are two different.
okay, under
Yeah.
profit or loss.
Yes. Okay. Right. Then, how do you explain capital and revenue expenditure?
Capital expenditure is uh capital expenditure is when you spend money on an asset that sorry, on a non-current asset that that add, adds to what you have or improves what you have.
Mm-hmm.
Meanwhile, revenue expenditure is fixing what you already have.
Mm. What about something that you didn't have?
As in
You buy a new item, a new equipment.
the, under capital.
Okay, good. All right. Then let's go over to the last one: accrual versus cash basis of accounting. Firstly, explain
Accrual.
what they are. Like, what do you do in
Okay.
there?
uh accrual accrual basis is basically in layman's term a transaction on credit where it's not entirely realized and is kind of predicted to be realized. It's like
Mm-hmm.
it's kind you expect it to be realized.
Mm.
And cash basis is uh things you have actually received
Mm-hmm.
and you pay according to what you have received.
Okay. Maybe if you take away anything about these two bases, just remember, accrual is over time, cash is point in time.
Right. Accrual.
I think that's will guide you more.
Right.
So under well, say this business is functional for the foreseeable future, which one do you use?
Accrual.
Okay. Then if the company is going bust,
Cash.
okay. All right. Then other than that, uh, good work.
Yay!
Yay.
I am dying. Uh, today we
Oh wait, I
learn
don't think you should
today
say it on stream. Hold on. Wait a minute.
we learned so much today in
Oh, okay.
class. I'm so dead.
Okay. That's fine. That's allowed. My bad.
Uh,
Okay.
No, we learned too much, so much from course today. I've learned this. My head cannot process.
All right. Okay. But it's okay. You tried your best during class, and that's all that matters. I appreciate this a
Okay,
lot, man. Especially when you're this tired.
thanks,
Hang in there. Hang
thanks,
in there.
Evan.
All right. Other than that, yes. Thank you so much for today.
So,
Yep. I'll see you around. Bye bye. Okay. So that is the end of the class, right? Hopefully you guys learn a bit. We did cover a lot more than what I expected, to be honest. We covered capital versus revenue expenditure, right? This is important because if you classify it wrongly, you'll have the wrong journal entry posted. Your entire, um, you know, oh, it actually doesn't affect your entire thing too much. It's just that the numbers will be off for each account. The total will be the same because of the way the money actually flows through. We'll learn this, well, not really learn this fully, but you'll be able to see this if you zoom out a lot more, right? But the main issue is the accounts will be the wrong number, right? You'll have a wrong balance in each account, and that could be an issue, right? So it's best that you get this down, right? Capital and revenue expenditure, right? Materiality is a kind of like a guide. Um, it's just to make sure that we don't get overworked, even though we're already overworked, right? Um, and then we did a bit of recap, right? And then we did learn going concern. Um, again, it's another theory, right? Uh, it is the reason why we recognize things over time in the first place. Because if we cannot assume that this business can continue, we can't do over time, right? We cannot recognize anything over time because, what happens if this business doesn't exist the next day, right? Then how do you recognize it over time when you don't know how long this business will be here for, right? So this is why we have to establish this, right? This is actually the foundation of our accounting treatments, right? And then accrual and cash basis are just different ways we do accounting. 99% of the time you use accrual basis because uh it is just more I'll say true, like more fair um in terms of representing figures, right? Cash basis is literally only when you deal with cash, which is not all the time, right? We have trade receivables, we have trade payables. Those things only have cash at the start and at the end. Okay, not even at the start, just at the end when you pay it or when you receive it, right? So yeah, this sort of things, cash basis isn't the best for normal accounting, and that is why it's also not taught as much in accounting courses. We just know they exist, right? Those people who actually learn cash basis are those people who do liquidation of companies. When companies declare bankrupt or they know that they're going bankrupt, they need to do all the winding down, all that stuff. And those people knows how to do cash basis. So if you're going into that line of work, then you'll learn it, right? Just not from me. I do not know as much, and I'm not going to teach something um completely out of my depth, right? And so yeah, I'll be focusing on accrual basis. I think everything in this course will be about accrual basis accounting, anyways, right? Other than that, yeah, if you have been watching this whole time, really, thank you so much. Yes, it is the middle of the week, as I said at the very start. Hope you guys hang in there, right? If you're watching this back, just really hang in there in life. Yes, and yeah, for those of you who are watching or caught this the day after, I will be streaming on Friday, 9th of, sorry, not 9th. What am I saying? 3rd of July, right? 12 p.m. UTC, and hope to see you guys there. We'll be continuing with this sort of questions. I find that this chapter is actually pretty good because it really covers the base, and I get a lot of things to talk about. Yeah. So other than that, really, once again, thank you so much for making it to the end of the video and the VOD or the stream, right? Yep. Thank you so much. I'll see you on Friday. Bye bye.